Hi there, a very good morning and good afternoon to all of you. This simply talks with another video, and this time this video relates to a very interesting chemical compound manufacturing company which has acquired another leading fluoride company which makes fluorine, fluoride, so fluoride chemicals. And so we'll discuss about that. It has been a real, you can say, mover over the last 2 months. The stock is. So we'll discuss about that. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about this company, here's a small request that kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts I put up from time to time on short-term, long-term market calls. And if you can pay $100 upfront, you get 1 year access by paying for 10 months. If you cannot pay on Patreon, you can join on YouTube by clicking on the join button, or you can be a member on WhatsApp as well. On a yearly membership, you can get the WhatsApp membership if you email me. Now let me take you to the screen of website and let's discuss about this company. The company in question here is ANUPAM Rasayan, which has done exceedingly well. Currently the stock price, if I refresh, is around 1180 rupees or so. But the company has been doing well. 1184 is the price. Slightly it has been correcting at the moment, but what we are seeing is that the stock has performed exceedingly well over the last 2 3 months or so. From around 580 levels, it has just blasted off in a big manner towards 1200, and nearly doubled, more than doubled, in fact doubled in about 2 3 months. Now I think it will consolidate after the move that we have seen. It is slightly stretched on the PE basis as well. But what we want to discuss here is about its business, which is very interesting. It's a 12,000 crore market cap company. So if you look at its business per se, then it is engaged in the manufacturing of specialty chemicals which are sold in local as well as export markets. They have businesses into life sciences, which is specialty chemicals, which are 92% of the revenue. And under this vertical, the company offers various specialty chemicals across various categories like agrochemicals, uh, we have personal care, we have pharmaceuticals as well, which is also part of it, and there are other specialty chemicals that the company do make. In terms of client profile, they have till FY21, the company had around 65 clients across the globe, including 18, you can say, multinational corporation, and there is a strong client concentration with the top 10 clients accounting for nearly 80%, more than 80% of their revenue. So this is a huge, you can say, a risk attached to it, that if any of these clients go away, then you lose around 8% of your total revenue. So that's a huge risk. But currently the thing here is that client retention is a strong entry barrier, and it takes nearly 2 to 3 years, 2.5 years to build a client. So in that respect, I don't think any other company could easily, I mean, come in and take their clients away. But yes, having 80% of their revenue coming from 10 clients is a risk in itself. uh, in terms of geographical split, we've seen that India contributes around 42% of the revenue, followed by Europe, which is 28%, Japan 15%, Singapore 10%, China 4%, and the rest of the world 1%. So what this gives you an idea is that Anupam Rasayan do not have, in fact, have very less, if anything, concentration in US, which is struggling at the moment, and Europe also has only 18% of the total revenue coming from Europe. So that gives the street confidence that the numbers will continue to be strong going forward, especially after the acquisition that I'll talk about in a while, the acquisition that it has done in a different domain, which is in the chemical domain, but in a different domain to what exactly that Anupam Rasayan does. Anupam Rasayan basically it manufactures hydrochloric compounds, hydrochloric acids, and such compounds, whereas the acquisition that I'll talk about is into fluorine. So that's where I mean they are expanding, and this is also a big thing because Tenfac, the company that they have acquired, is a huge player in that space. So that's one thing. So let me just take you to that probably the news of the acquisition part. So basically incorporated in 1972, Ten Flag Industry Limited (TIL) is the acquisition that the company has done. Is a specialty fluorides chemical manufacturer. Notably, Anupam Rasayan is also a leading producer of hydrofluoric acid and is engaged in the manufacturing of other organic and inorganic compounds as well. So they make hydrofluoric acid, and this is fluoride compounds that we are talking about, and this has usage across the board, especially in ACs etc. as well. So this is something that the company would be looking to expand going forward, and this tells you what the management thinks of, say, doing probably 8, 10, 15 years down the line through these kind of acquisitions. So I believe that this company is a long term bet at 12, 13,000 crores. If you get a chance to buy it 10, 15% lower from current levels, this is a very good company to buy from a 10, 15 year point of view. If somebody wants to buy a small cap company in a domain which is company in the chemical space which is diversifying. So if you look at the numbers, we'll come to the technicals in a bit, but if you look at the numbers, then on a quarterly basis, if you look at the consolidated numbers, then we see that in the March quarter they did 480 crores versus 325 crores. That's a huge jump in itself of around 45-46% in terms of sales. But margins have come down from 32%, now it's down to 24%, but I believe around 20 to 24% is where the margins could end up stabilizing. Operating profit went up by around 10% or so because of the margin shrinkage year on year. Even quarter on quarter margins have shrank by 4%. And this is probably owing to the transportation cost, oil freight cost, a lot of other factors, what is happening in Europe, etc. So the numbers from there aren't that great. Eventually net profit, if you look at, so what has happened is that other income has done well. So 24 crores of other income versus 7 crores, you can say, loss of other income that took place. So that gave it the fillip, and eventually by paying lesser tax on 103 crore, 29% tax, they had a net profit of 73 crores versus 46 crores. And so eventually we see that the EPS is around 5.3 rupees this time around versus 4.6 rupees. So for the year, what they have done is that the sales is around 1600 crores, which is a good 60% jump. And this is where I think the jump makes it possible for the stock price to jump at 70. It's trading at a 70 PE because the way the sales are expanding, and with this acquisition sales are going to grow even further. We believe that the company is set to do even better. So eventually net profit of 217 crores versus 150 crores is pretty strong. And the EPS that comes out to be is around 17 rupees at the moment. So I think that going forward, this is going to grow at around 20% on the bottom line, 30-35% on the top line for the next 2-3 years, and that's why it's trading at a PE of around 70. Now, uh, if you look at the balance sheet as well, it looks pretty strong with 2000 crores of, you can say, revenues from only 400 crores of revenue in 2019. So that has been, I mean, that's 5x at the moment. Borrowings are stable, so that means that the reserve that they are having, and that's why they are able to acquire companies of that stature that they are doing at the moment. The debtor days has sorry, the inventory days have come down 850 days in, you can say, in March of 22 has come down to 480 days, and probably should come down even further going forward. In terms of shareholding pattern, 60% is with the management. FIIs hold around 8.5%, which has increased over time from around 4.5% in September. that has increased, although DIA holding has decreased a bit, and public shareholding is around 25.5% at the moment, out of which we have Milan and Thakkar holding around 18.2%. So there's around 7.5% free float that we are seeing, and that is why such huge move, because the free float itself is only 7-8%, and that is why the kind of move that we are seeing on the upside is absolutely tremendous. Now coming to the technical part of it, and if you see here, so for the technicals, let me take you to the uh, money control website, and we'll discuss about the technicals here. So if you look at it here, uh, if I open up Anupam Rasayan, we'll know technically speaking it's extremely strong but extremely overbought at the moment. So we could see some kind of consolidation now. And if you remember, see, the stock prices technically mimic as to what stock prices and other stocks do. And so I believe that similar to what has happened with Mahanagar Gas, that moved from 900 to 1200 some years back and then has remained in a range between 900 and 1200, it's better to buy it around 1000. So I believe around 1200, 1220, there's a strong resistance. The way the stock has moved is it's having an RSI of 76, 77, extremely overbought at the moment. Even on a 3 year basis, 3 months basis, it doesn't look that anyway it is sold or anything. So I believe that any dips towards 1100 to 1080 will be a good buying opportunity. I don't see it go below 1000, on a long term basis. So I think 1100 to 1080, 100 rupee dip from current levels because of any reason you can buy, or on a breakout about 1230 you can buy. So that's the call on Anupam Rasayan. If you look at moving averages as well, on exponential moving average basis, there also the 20 DMA is 1050. So one has to see some sort of a correction or at least consolidation for a short term trade, to for somebody to buy short term into this stock. Otherwise, long term players also should look for major declines to accumulate and then sit on it for the next 4 5 years to make money. So this was a video on Anupam Rasayan. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.